Good morning, all. Thank you for joining us. I see the room is filling up. We're going to give folks just a couple seconds to get settled, transition from their prior meetings, get ready for today's conversation. So I appreciate your patience with us. If you have any questions, you'll see where it says chat on the bottom of your screen. Feel free to type in your questions there and interweave them throughout today's presentation. Thank you. All right, well, the room is filling up fast. Happy to see that. And to kick us off, I just wanted to cover a few elements today. Good morning, everyone. My name is Carlos Medina, pronouns he, him, his, and I'm the Learning Services Manager at San Diego Grantmakers. And I wanted to welcome you to Philanthropy California's webinar, an overview of impact investing for foundations. And I'm going to go over a few housekeeping elements today just to set everyone up so that we're all prepared for today's presentation. First, I wanted to let folks know and remind some folks that if you have any questions, you'll see at the bottom of the screen it says chat. Feel free to type your questions in there. Additionally, we will be recording today's webinar, so just wanted to let folks know so that they're aware. And finally, at the end of today's webinar, we will be introducing a poll, an evaluation poll, and we really appreciate your feedback and the time you can take to respond to those questions because that survey data will help us to improve our future programming. So with that said, I would like to hand things over to San Diego Grantmakers President and CEO, Debbie McKeon. Debbie, I believe you're on mute.
I'm sorry. Good morning, everyone, and welcome, and thank you, Carlos. And maybe I'll just invite that even the speakers, if you're not speaking right now, that you just go on mute just in case there's any background noise. But I'm delighted to be here this morning. Debbie McKeon, President and CEO of San Diego Grantmakers. And I'm really pleased to welcome you to the RBC Global Asset Management Philanthropy California Impact Investing Series. This is our kickoff for this series, and we're really excited. At Philanthropy California, which is an alliance of Northern California Grantmakers, Southern California Grantmakers, and San Diego Grantmakers, we believe deeply in the power of networks and partnerships to catalyze positive social change. By sharing ideas and partnering philanthropy with business, government, nonprofits, and our communities, we know that the whole can be greater than the sum of its parts. Philanthropy California members study social and environmental problems, determine where capital can be strategically placed to affect durable change, and back the best practitioners in the field to create that change. Today's conversation is about a growing practice in philanthropy, impact investing, an idea that you can deploy capital to create both financial and social returns. My dear friend, Catherine Bonnat at RBC Global, and I have been collaborators for years, and we're proud to bring this introductory series to you today. This morning, you'll hear from leading Philanthropy California members, your peers, to learn from their experiences in starting their impact investing practices. Philanthropy California believes in the importance of both peer learning and world-class partnerships to advance our common mission to create an equitable California for all. And on that note, I'd like to introduce our partner and my friend, Catherine Bonnat, the Managing Director of Responsible Investing at RBC Global, to share some opening thoughts. Thank you all for being with us today, and without further ado, Catherine.
Thank you, Debbie. It is a privilege to be counted as your friend. And thank you to San Diego Grantmakers and Philanthropy California. Thank you all for joining us here today on what we at RBC believe is an incredibly important topic. RBC believes in equity. We understand the power we wield as a large institution, and we take our duty seriously to support investments that create positive impact in communities, and at the same time, offer security for our investors. We believe in the importance of a robust impact investing ecosystem in California, RBC has catalyzed similar work in Minnesota and New York, and we're very excited to partner with Philanthropy California at this inflection point in the state's trajectory. Now more than ever, partnerships like this are required to meet unprecedented challenges. By collaborating as investors, we can build on the powerful philanthropic work that you are all doing. We can collectively work so that the whole of the collective investment portfolios become greater than the sum of the parts and accelerate positive impact for underserved communities. We hope we can help support and promote environmental stewardship and tackle so many of the financial, social, and racial inequities that so desperately need to be addressed. We are grateful for Debbie's vision that has catalyzed this initiative and brought us all here today, and hope that we're launching into the power of something really different, wonderful, and showing how collective action can create social change, as we all know you do as well. Thank you for allowing us to be here today to work together to advance ideas, practices, and insights to build a more equitable future for all Californians and to show everybody else how to get this right. Thank you, Debbie.
Thank you so much, Catherine. Really appreciate your thoughts and your insights, and also the tremendous support for California that you just shared with us. So important to all of us here today. And now, to kick off our conversation, I'd like to introduce our moderator, Robert Foster, who's the Director of Impact Investing at San Diego Grantmakers. Robert has been an impact investing practitioner for well over a decade, and his work spans from leading a State Department initiative on impact investing to venture capital. So he's passionate about the topic that we're going to enjoy today. So with that, I'm going to turn it over to you, Robert, to kick us off. Thanks.
Good morning. Thank you, Debbie. Thank you, Catherine. And thank you all for being here with us this morning. As grant makers, we all want our organizations to have cutting edge, impactful investments that align with our mission. But to get there, it's not simple. The conversations can be challenging. There's different sets of risks that are put before us. And as we all know, transforming foundation investment theses and practices happens in any way but overnight. It's a long journey. And today we have brought together members of Philanthropy California from up and down the state to talk about where they are in their journey. The point of this series is to have peer learning experiences so you can learn from those that are in that are on your same wavelength and moving through the same steps as you are. I'm so pleased today to have this four wonderful speakers. We have Preetha Tranti from the Sobrato Family Foundation, Shawn Straughan from the Roy and Patricia Disney Foundation, Rachel Myers from Kaiser Permanente, and Ricardo Flores from LISC down here in San Diego. So the way we're gonna take today is we're gonna have everyone introduce themselves. We'll be having some discussion here, and then we invite all of you to send your questions through the channel or to email any way you like to us, and we will then take those questions and move those into the speakers. So first, Preetha, would you mind giving a quick introduction to yourself, and then we'll pass it around the entire set of speakers.
Sure. I'm assuming you can all hear me okay.
Yes, perfectly.
Perfect. Great. Well, great to be here. Thanks so much for the intro. I'm Preetha Tranti. I work as a program officer at the Sobrato Family Foundation. We're based up in Northern California in the Bay Area, Mountain View. The foundation is a part of the Sobrato organization, which is a family-owned firm that's played a really dynamic role in the growth of Silicon Valley for nearly 70 years. We partner with communities to build a world that is more inclusive, equitable, and sustainable. So we're guided by the business philosophy and the values of the Sobrato family, and we have 3 generations who engage in grant making, advocacy, impact investing, and other collaborative efforts. The foundation has a couple of areas of focus, including economic mobility in Silicon Valley, supporting English learners statewide, and conserving our oceans globally. Individual family members of the Sobrato family also have other areas of interest that they support individually and personally as well. And I wear many hats at the foundation, including supporting the body of work focused on the oceans and our impact investing work. So excited to be here and to learn from you all as well.
Thank you, Preeti. Shawn.
Hi, Shawn Straughan, the Executive Director of the Roy and Patricia Disney Family Foundation. We are focused on criminal justice reform, affordable housing preservation, and environmental justice. We are a small family foundation, not connected to the corporation, but we are Disney family members. And we recently launched an impact investing portfolio with about a 10% carve out of our endowment. So we are on the very first steps of the journey, and really excited to talk a little bit more about what we're learning.
Thank you, Shawn. And Rachel.
Hi, good morning, everybody. My name is Rachel Myers. I'm with Kaiser Permanente. We're the nation's largest integrated health system. We also, as part of our nonprofit status, we do make grants and are members of the San Diego Grantmakers as a result of that, but we're not a foundation. The work that we do to support our communities is really explicitly tied to our mission, which has been the same for 75 years. To provide high quality, affordable healthcare services and to improve the health of our members and communities. And we understand that our members can't be healthy if they live in unhealthy communities. And we also understand that health is driven by far more than healthcare, that many of the things that are making people healthy or unhealthy today are more to do with where they live, how much money they have, how much access to food they have, how stable their housing is, and how good their environment, the air quality and the other environmental factors are around them. So we make a lot of investments in that space. And we launched a $200 million impact investing carve out of our, actually our corporate, for want of a better term, balance sheet in 2018. And we've been making investments since then.
Thank you, Rachel. And Ricardo.
Yeah, good morning. My name is Ricardo Flores. I'm the Executive Director of the Local Initiative Support Corporation, also known as LISC San Diego. And we are what's called a Community Development Financial Institution, or a CDFI. And we've been in existence in the United States for about 40 years. In San Diego, we've been here 30 years. We've got about 33 offices around the United States. And really our goal is to bring money from Wall Street to Main Street, or to Main, if you're in certain communities. That's really the goal of LISC, and we do that really with the ability of a bank like the CDFI. And so right now, as we're dealing with this COVID and other issues, LISC has become very important for a lot of folks because of the infrastructure that we've created and the ability to reach those very hard to reach businesses or provide capital for affordable housing.
So as we could all see, everyone here, or our speakers, comes to impact investing from a different approach, but the basic practice is the same, where there's an anticipation of an investment that's going to go forward, where you will receive both the financial return and or a social and or environmental return. And to start, it's pretty intimidating. It's pretty daunting. There's a lot of ideas to tackle, many internal processes that need to be managed, and as well the practice of communicating outwards, so that everyone's aware of what we're doing and having the transparency we need. So on that note of all the ways we could get here, Preeti, can you please talk a little bit about what it was like for your organization and to get started on the impact investing journey, and what you think other members might want to understand about what that processes look like?
Yeah, absolutely. Well, a couple thoughts. So we've really been running on kind of parallel tracks for a couple years. So we have a bucket of investments that we've made that directly support our foundation's goals. And these are things like, facilities loans to charter schools to advance in the region, or investments to support oceans health. And these really vary in form and function. So some are debt, some are equity, but they're really focused on furthering our collective mission. So there's the sort of foundation-wide bucket of work that we've been kind of building out over a few years, and really in an organic way. And then there's a second bucket of work that's really focused on family members' individual interests. And so they've been on their own impact investing journeys, and they're pretty varied. So they're, family members that are really interested in microfinance in Central America, and others that are focused on cancer-related research across the US and globally. And some are really focused on recycling capital, and others really want to look at, higher rates of return coupled with their impact. And so just the variation in the both family and the foundation related investments has been huge. So as we've kind of continued down these two tracks, we are at a moment now, and that was really organic, sort of the development of these two tracks. But now we're at a moment where we're sort of seeing opportunities for like leverage and efficiency and sort of systematizing across these different buckets. I think a lot of what you just mentioned about, it takes a lot to kind of operationalize this and to think about sort of the like larger strategic questions around what this looks like is where we are now. So we're trying to figure out how to best use these impact investments as a tool in a consistent way. We're also supported by, we're part of an umbrella organization called the Sobrato Organization, which houses both the philanthropic and the business efforts and the business sides of the house. So there's opportunities for alignment there as well that we're exploring. And so in general, we're kind of figuring out our approach now, both structurally and in terms of strategy and content across these different threads of work.
Thank you so much for those insights and that framework. Shawn, could you talk a little bit about your journey and where you're at at this particular phase?
Yeah, so I joined the foundation about 2 years ago, and one of the first things that we sort of talked about was how we can use our endowment more in service of the communities that we're supporting and the issues that we're covering. I think in a lot of foundations, there's two sides of the house, the endowment side and the program side, and never to meet. But this time we were really trying to really see if we could do a little bit more and do things differently. We're focusing on investing with a racial equity lens and a gender equity lens, supporting early stage fund managers, trying to de-risk certain investments, or at least trying to change the conversation. We're also sort of tackling, I would say, all aspects of investing. So including where we bank, supporting community-based banks, or making cash deposits at Black-owned banks. But in terms of the journey, it was literally a conversation amongst the family about, just doing more. Right, there is making about $6 to $7 million in grants a year, while you have 140 million, sort of sitting in the market doing what it does. It wasn't the most impact we could have. So this was just an open and honest conversation with the family about wanting to increase impact and looking at the endowment as a way to add to our ability to increase impact.
And that ability to increase impact and to be able to ratchet it up is something that I know Kaiser thinks a lot of. In fact, in Rachel's title, it's actually, she is the lead for economic opportunity and impact investing. So Rachel, can you talk a little bit about Kaiser's approach and how they've approached this particular journey?
Yeah, sure. So, I mean, for us, I think, we've wanted for over a decade to really align our investment portfolio more effectively with our mission to support health in our communities. And we've done a number of things, like we disinvested from tobacco and firearms. We integrated ESG, factors into our investment portfolio. And we've also done extensive investing in renewable energy over the years. But we had not done sort of community-based investments that really, you sacrificed a bit of the financial return for the social return. And so that was kind of our big achievement in 2018, was to be able to have a change made to our investment policy statement and actually put that into practice for the long term. It's designated as a revolving fund of $200 million. So as the investments are returned to us and as it grows, we're able to reinvest over time. So that was sort of the first part of the journey. And I'll say that we had a lot of help. There are other health systems that have done this for a long time. Many Catholic health systems have done this. We're a member of a group called the Healthcare Anchor Network. There's a collective of us that are seeking to create this capacity in our institutions. I think there's a lot of learning for your members as well. And, you know, for me, like looking at example investment policy statements from foundations, the Heron Foundation has a really excellent one that's published on their website. There's a lot of examples out there that can make this a lot simpler. And for us, you know, our first step was really convincing our treasury that we could do this and showing them that it was like that we were following sort of their procedures and their protocols. And so writing an investment policy statement for them, like that was the thing that broke through for us and that made it happen. Having it written in their language, you know, in an official way and based on examples from other health systems as well as from foundations, that was what made the difference for us. So I think that was kind of the first part of our journey, and we've made a lot of investments, mostly with CDFIs. LISC and Enterprise Community Partners are our two major partners. They're both national. They're the two largest national CDFIs, and for us at the scale that we're at and the comfort, the sort of conservative, the level of conservatism of our treasury, that was comfortable for them. I think now on our journey where we are is starting to push a little bit at the comfort zone. And to think about direct investing. We know that financial intermediaries like LISC are absolutely critical to moving the needle, but we also know that if you can make a direct investment with a housing developer or a bank or an entrepreneur, that the money goes a lot further and the impact can be more significant. So we want to explore that. We want to understand the potential for loan guarantees, for example, where the money may never leave your balance sheet, but unless it's needed, but it enables so much more activation of other capital. And so that's something that we're curious about. And then the other thing we're exploring is how do we work with some of our community foundation partners with whom we have really extensive relationships in terms of our donor advised funds, to think about activating impact investing, because some of them know how to do this and offer it as a service. Our partner in Colorado, I think the Denver Community Foundation, offers this and is very sophisticated. Silicon Valley Community Foundation is very sophisticated. But others that we work with who we hold, frankly, millions of dollars in DAFs with, they are not capable of doing impact investing right now. So we've been working with one over the past 6 months to develop that capacity and to be able to provide that service for us with some of our other assets. So those are some of the things we're starting to push a little bit beyond where we've gotten to so far.
Thank you very much for that, Rachel. And now, Ricardo Flores from LISC. Ricardo, you're interesting for many reasons, but one of which is you are an impact investor as well as an impact investee. So please tell us about your journey. What got you started?
Yeah, so LISC is really a 40-year impact investor. And the way we are a spinoff of the Ford Foundation. And the question was posed to folks at the Ford Foundation in the late 70s, what can we do to help our inner city communities? And out of that conversation, LISC was created. And initially, and I mentioned earlier, we're what's called a Community Development Financial Institution, or a CDFI. So all credit unions are CDFIs. So we're CDFI, but we're a non-depository CDFI, meaning we have the ability to move money and to get money into places, but we don't take deposits. But when we were first created, our money came from the business community and philanthropy. And what we did was we would underwrite that money in local markets to build affordable housing. And we are to this day integral into the creation of affordable housing. Most affordable housing developers, when you look at what they advertise as about themselves, they say they may manage about 10,000, 20,000 units, whatever the case may be. But the operative word is manage. They don't have enough. They don't own the properties enough to be able to go and collateralize that. And that's where a group like LISC comes in. And we provide that capital to them so that they can buy a piece of land. Because once they buy a piece of land and entitle it and do all the due diligence, the land has value. They can go after a traditional bank to do that. And so that's what we've been doing, LISC, for 40 years. And in the 90s, when Bill Clinton put real teeth to the Community Reinvestment Act, that became a large source of our capital. And so to this day, our banking partners provide us low interest loans at about 3%. we then turn around and, because again, we're moving money and it takes money to move money. So we're putting about a 3% on top of that. And then we're getting that out the door to affordable housing developers at 6% interest only. And so that again is allowing them to buy a piece of land that a traditional bank cannot provide the capital for. In fact, we have many folks on my board are bankers, local bankers in San Diego, and oftentimes they will say, can you guys provide the pre-development loan and we'll pick up the construction loan? And so that's really what we've been doing all these years. And the other part of this now too is we can also structure loans if it's an individual. So if an individual says, look, I want to do good, but I want to provide capital in order for that capital to do good, but I don't want to lose all of that capital, kind of like a credit enhancement. We can do the same thing because we have access to monies, to loan dollars. So we can then pair that credit enhancement from philanthropy, whoever it may be, to lower our interest rates and to get that out the door even cheaper than what we can do at 6%. For pre-development. And the same is true when we're dealing with small businesses now. That's an area that we were not as robust in, but because of COVID, we've seen businesses all throughout the United States, Kaiser being one of them. They were partners before COVID, but now we're seeing groups like Netflix, Verizon, Lowe's. They're coming out and they're saying, look, we want to do good. We want to provide capital to small businesses in the form of grants, but we don't have the infrastructure. We don't know where these businesses are, who these businesses are. We don't have the infrastructure to move money from point A to point B. We also don't have the technical ability to know, are these businesses sustainable? And so that's where a group like LISC comes in and says, okay, we can provide that conduit to these communities, because at the end of the day, what we're talking about and many of the challenges we're facing in inner city communities is bringing capital to these communities. And so, in fact, behind me, you see this is a redlining map of San Diego. If you think about this redlining map, these communities down here that were redlined, the whole intention of LISC and the CDFI movement was an outgrowth of the civil rights movement, of that last piece of the fair housing piece to it. And so we were created really to try to put capital back into these red areas from Wall Street, from banks. But now what we're seeing is communities, whether it's philanthropic community groups, businesses that before had looked at communities and said, yeah, we want to be helpful, we want to do what we can, are now saying, hey, you know what, the path to the future is right through these neighborhoods. And for folks like Kaiser, the realization is that they understand, as they like to call it, swimming upstream, that there are individuals that are living in conditions that are going to make their health outcomes much worse, which is going to drive up healthcare costs. And so if Kaiser or other groups can go to these communities early on and try to create the conditions to improve their lives, they will do that. And that's what they're starting to do and starting to think that way. And that's why this impact investing panel is such an interesting discussion right now, because we realize that the federal government, or not even the federal government, I should say the state and local governments around our country, are not able and capable financially to really deal with the challenges that we're facing. And that's why it's important that the corporations step up, hospital associations step up, other anchor institutions step up, and then use groups like LISC, if you will, to provide that money to these very, very hard to reach places. And then the last thing I'll say is we were an allocatee of the PPP monies as well from the federal government. And it was a little late because early on, the banks had kind of traditionally gone to the folks who they had lent out to. And so by the time the federal government said, hey, yeah, you guys as CDFIs can operate in that space, the level of comfort was not as strong. But our intention was to get it to very hard to reach businesses. And we were very successful in doing that.
Thank you so much for that, Ricardo. And as you can see, impact investing is broad in its breadth, and there are many tricks of the trade and ways that we could get to the other side. But that basic idea of putting capital forward with intention to have that both that social return and or environmental return, as well as the financial return, is something that remains consistent. And when we think about our foundations or organizations adopting policies that will move towards impact investing, like Rachel articulated, it's not always simple. It's not always easy. So Preeti, can you please talk a little bit about challenges that you might have encountered along Sobrado's journey, either with stakeholders, board members, or community, as you move forward in both communication and or the practice of getting to that next stage?
Yeah, absolutely. I mean, I think some of what we've heard already around just the range of tools that capital that can be used to support. We've talked about loan guarantees, direct investments, supporting CDFIs, and there's just such a range. And I think for me, the biggest challenge and one that we're really working through now is articulating clear strategic goals for this portfolio so that we can compare across these different types of investments. I actually come from the grant side. I'm fairly new to impact investing. And so for me, really putting impact forward is kind of natural, and trying to understand what the best tool is to solve which problem is kind of the challenge I'm really trying to figure out, is sort of, what capital is best for which problem. And strategy is really, I think, the precursor there, is trying to determine sort of what are we trying to do with which bucket of money. So I'd say, figuring out kind of how to articulate that strategy across these different buckets of work that I've described, the foundation's work, the collective work, as well as the family's individual work, and even some on the business side, has been a challenge, and one that we're really working through now, with some support from external advisors as well. The other thing is, it's really hard to, when you're new to this space, to get your head around all this range of different investments. There's a lot of greenwashing in this space. There's a lot of impact washing. And I think trying to figure out sort of who's really holding impact first has been something I'm really trying to work towards, and relates to my second challenge, which is, around impact metrics and impact reporting. Like, I think it's really, it's been a challenge for me to figure out how to ensure that impact on individual investments is not only prioritized in a genuine way, but is actually measured and reported on and aggregated so that we can learn from it and make sure that our investments are just being used in the way that I think will lead to the most good, as relates. And there's of course others, I think, as you mentioned, the challenge of structuring this. So do you have external advisors? Do you staff this up internally? And we're really grappling with that now. I think, form follows function. So I think, like, we are really trying to figure out what are we trying to do with these various buckets of work and how they tie together, and make these decisions. And then we'll sort of build out the structure as follows.
Preeti, I love the way you phrase that. You come from a grant making background, and in some ways, this is just one other tool in the toolkit that we are using to advance the change that we want to see in the world, to further the mission of our organizations. And I think when we think about impact investing as an additional tool, it starts to lose a bit of the mythology where it's more approachable. Nonetheless, there are challenges. And Shawn, we'd be delighted to learn about a couple of challenges you might have encountered along your way early on in the journey.
Yeah, I would say the first challenge is around return expectations, and sort of just having the initial conversation with the sort of finance side of my house that tends to lean very conservative, and sort of they're managing the endowment, and there's a strong desire to grow it. So having this conversation about how do you do things a little bit differently without losing what the expected return is. And our impact investing sort of portfolio, we're still trying to get a market return. And it's going to be a blended portfolio, right? So there will be the investments that we make that are far below market, and maybe doing a traditional PRI to a CDFI, or just making opening up a CD at a bank, right? You're not getting much in terms of returns, but it's moving. We're moving cash that we had in the bank already at Bank of America, and just moving it to a different bank. And getting probably the exact return, or slightly better from a CD product. But the most difficult thing is having this conversation that a person of color or a woman fund manager is not going to bring the same return, right? And I walk into every room saying, I'll never talk about people of color, I'll never talk about women in a discounted way, right? That their return is expected to be less than what the white male who went to Harvard Business School just pitched you in the earlier meeting, right? So it's the same expectations. So I think the biggest challenge is de-risking the profile of the fund managers in these rooms that are typically not very diverse, and definitely not, so they're not diverse on ethnic or gender, and they have a very old school way of thinking. So that's been the biggest challenge so far.
Thank you so much for that, Shawn. And yeah, as you said, the data is so strong out there about the bias that investors bring to the table when they consider an investment. And by creating positive examples like you are, we can help change that mindset across the board, which is extremely powerful. And I think that's such a wonderful example that the individuals we invest in are at least as important as the investments to be able to demonstrate that transformation that we want to see in the world. I know, Rachel, that Kaiser's been involved with impact investing quite some time. As you said, you have your $200 million. You've been down this road for a while. But when you think back to challenges that you've seen that are most relatable to our audience who's starting on their journey, which ones come to mind, and what clever solutions have you seen?
Well, I mean, I just want to say that I relate to a lot of what Shawn just said. You know, we're a healthcare organization. We have an extremely conservative CFO and her leadership team, and it took a lot to convince them. And frankly, kind of the way that we got across that finish line was by making the number that we were requesting somewhat insignificant for them, that they were willing to make an experiment. So I will say that, you know, it might be worth starting small. Obviously, 200 million doesn't seem small, but it represents all of our assets as an institution. You know, I mean, it's a portion of all of our assets as an institution. So it's small for our CFO, and so that made it easier for her to consider this. The other thing, you know, the other challenge I think that we've come up against is risk tolerance. And so we started very intentionally, again, with the two largest CDFIs in the country who have AAA ratings, and with investments with them that were, you know, guaranteed by their balance sheet. And so it was essentially like a no loss proposition. And yes, it was a lower return, but it was a very safe investment. And so we did that on purpose because we wanted to prove that, you know, we wanted to show that this could be safe and comfortable. And so now I think our challenge is moving out of that comfort zone and taking on riskier investments with those same CDFIs, as well as taking on other partners that may be seen as a little bit riskier. You know, I think I was trying to think of another challenge that I had in my mind. You might have to come back to me. But, well, I'll say another thing that we did, you know, we had our strategy done, and there was a chat about firms that supported us in our journey. And we had some wonderful work done by a group called Avivar, based out of Southern California. And they did a really excellent strategy process for us. But it was just huge and overwhelming. And sort of to Preethi's points, like there's such an ecosystem out there around this space. And we actually, our former CEO, Bernard Tyson, when he found out that we had this impact investing fund allocation, as soon as he knew that it had been approved, he wanted to put it all towards affordable housing, because housing is a huge challenge in our geographies. And at the time I was sort of frustrated because we had all these ideas. But honestly, it's been really helpful because it's helped us really focus and understand a space and really build our own expertise. And building on that foundation, we were able to expand to the partnership with LISC that's focused more on economic development and sort of frame it in the context of, well, people can't have stable housing if they don't have stable income. But we were able to build on a really solid, from a really solid space where we felt pretty confident about our knowledge of the space and the investment impact. So that was another strategy that we took that I think could be useful for others.
Thank you so much for that, Rachel. And one of your gold standards of investment is indeed LISC. And LISC, like we said earlier, you both make impact investments, but also help channel those as an intermediary. And for those who don't know, an intermediary is just a group that helps take these impact investment dollars
Yeah, no, that's a very good point. The CDFIs, and I apologize if my screen's a little darker now. Something's going on here. But yes, part of what the CDFIs can do, like LISC, is to help de-risk investments. And so as Rachel was mentioning, LISC has a pretty large balance sheet. We are triple bond rated. And we use that strategically to show partners like Kaiser and others that an investment in an inner city community, because that's really where this investment will go, is a safe return or safe bet for you all, because we're going to pledge our balance sheet to that. So that's really important. And the other part of it too that we've created over 40 years is that we are located in communities. So we are strategically located in 30 some odd communities around the United States. And what that provides us is an opportunity to partner, and we've created partnerships with business improvement districts, with what are called community development corporations, which are people coming together to do development in their communities. We partner with those groups year in, year out, provide grants, technical assistance, whatever it may be. And really what we're seeing the benefit right now in COVID is that infrastructure that we've been working on with our partners around the United States has been able to really get businesses and other folks hard to reach places, money, capital from, whether it's a corporation or whether it's Wall Street, wherever it may be. And so that's really the benefit of a CDFI. And my background is in government, believe it or not. And so what I've learned though in this world is that finance is a very creative endeavor. How you take money to go from point A to point B and mitigate risk all along the way. That's really what many of you on this call and many folks who are impact investors are trying to do. How do you mitigate that? And so oftentimes it seems very daunting, but there are groups like LISC out there that can really try to help explain, this is what you could do. This is how you could do it. This is how you could use our balance sheet. Because again, our whole goal is very simple. How do we get more capital in communities that have been without that capital? And we can do it in the form of grants. We can do it in the form of loans. And how do we actually build that environment for housing as well? And also too in a space too where many folks, like Rachel was saying, this is not their primary focus. Their primary focus is to provide healthcare for folks, and they need to be sustainable to do that. And so that's really important. And so we have that understanding as a culture. And I think it comes a lot of times because of our relationship with our banking partners. So last year alone listed about $300 million in loans around the United States. Most of that is capital from our banks, because of their CRA, Community Reinvestment Act obligations. And so, talk about a conservative group of individuals. Banks are very conservative, very regulated when it comes to where they place their capital. And so we have that ability to work with them. And I think that's the one thing that I hope folks take away from this, is that there are groups out there in your community that have the level of sophistication to talk to your CFO, to talk to people in your organization that really understand how money's moving within your organization, and can make them understand that an investment in a group like LISC or another partner of ours is not only important, but it can be securely and safely done, and that capital can be used. And then the last piece of it is, because we also receive what are called HUD Section 4 monies, and they're called capacity building monies. So not HUD Section 8, which is housing, but HUD Section 4 capacity. And we provide that to our CDC partners, because our goal for them, the community development corporations, is to hire somebody that has understanding of real estate. But because of that, we're one of the few entities in the country from this, we really do understand how to report back to federal government, and also for our banking partners to report back to them where their CRA investments are, because that's really, really important. It's really important when an organization like Kaiser says, look, we're interested in this space. We acknowledge that this space is not the comfort level for us, but we know it's important to be in. But we also need to know where our investments are. We need to understand the story of how those investments played, and we need to know how that investment is catalyzing additional investments, because that's the secret sauce in all this, right? And we're doing it here in San Diego. Kaiser's come into a community called City Heights. We've gone directly to one of the main philanthropists for City Heights, a gentleman named Mr. Robert Price, whose family started Price Club. And we said, look, Kaiser's in City Heights now. And those two titans together in City Heights leverage each other and provide that additional security and provide that additional investment. So the interesting thing about this impact investing world that we're talking about is that there's a lot of different ways to do it. I think Preetha mentioned that, your organizations have to think, what do you want to invest in, right? Is it affordable housing? Is it economic development? And really then, what do those investments look like? Do you need a return on those investments? If so, what is the return? And how do those investments, what's the best use of that capital to do that? Because again, groups like LISC, our goal isn't to take your capital and to invest it and that's it. Our goal is to take that capital, however you want it structured, go out and find additional capital by leveraging that capital, and then the end point is to get it into neighborhoods of opportunity.
Thank you, Ricardo. That's really helpful and insightful on the actual structures. Mindful of time here, we have a little bit left. We have some great questions coming in from the audience. One of which is, what are you seeing as the biggest obstacle to getting return from community investments? And is there a particular capability that you've had to start building with community partners in order to create that investment confidence? I know, Preeti, you've talked a little bit about building out tools. Shawn, you've been directly investing in communities. Would either of you like to respond to that and talk about obstacles in deploying money in the community? Shawn, please.
I'll take that. So we are very place-based. Most of our investments are in East LA and South LA now, and then we do some investments in New Orleans and Tacoma, Washington, and Nairobi, Kenya.
Wow.
In terms of so again, that return from investing in the community, I think you have to define the return that you're actually looking for, right? So for me, depositing $250,000 in a bank in South LA is going to produce a tremendous amount of return over time, but it's a passive way of doing impact investing, right? The bank will then, they'll loan those dollars to small businesses in the neighborhood. They'll report back on some CRA stuff and other things. It's not a huge financial return, but supporting that institution is producing a significant return in that community. Investing in affordable housing sort of product, whether it's like providing pre-development capital or acquisition, PRI for acquisition capital, you see immediate return when the building is built and families start moving in. And that you're, as a foundation, you're a part of that story. We support a number of affordable housing developers in East LA, and it's something that is it's really a great story, and it's something that I encourage other foundations to do. Start a PRI program. If you don't want to start a PRI program, support another foundation that already has one in place. So just partner with someone else and so deploy capital on that way.
Thank you so much for that, Shawn. Another great question from the audience. When the private foundations, when you were working through the education decision-making process, where did you get counsel? And if you were to do it again, what would you change in the process? Preeti, would you mind tackling that one?
Yeah, sure. So I would say we've drawn on many different firms, and I mentioned a couple of these in the chat: Impact Assets, Arabella, Align Impact, and for different purposes. And I think, like, just taking a big step back, I've talked a lot about sort of the need to define strategy and be really clear about what you're trying to do, be clear about what you mean by return, as Shawn just said, be clear about the tools you want to use. But actually starting really organically, which is what we've done, and drawing on different firms that are sort of, folks that have good networks, good tentacles, a good focus on impact first, I think can be a good way to start, and sort of building in structures to learn as you go. So for example, we were diligencing 2 potential investments and ended up intentionally picking 2 different firms so that we could learn about sort of the difference in their approach around diligence. And this was a really helpful way, because I think, there's not a standard definition of what diligence includes in the sector. There's some general norms, but there's really different approaches. And so I think, the question about firms is a really good one. There's so many. I named a couple that we've drawn on and have been really pleased with. But I think the most important thing is to be really intentional about learning as you go, because you'll sort of figure out, like, who is pushing you in the right way and who's really who's pushing your thinking, who's delivering sort of what you're looking for from a consultant. Yeah, I think I'll leave it there.
Great. And Shawn, would you mind commenting a little bit on that too, as well, just from the private foundation perspective?
Yes, so I would say ditto to everything Preeti said. I'd also just say that this is a very interesting space in terms of so many other people going through this impact investing journey, and we're able to talk to one another. No one's there's no sort of proprietary information. I think this is like one of the most open spaces because it is like the wild west, and we're building it. We used Avivar Capital because we're focused on gender and racial equity lens. So we want to make sure that we had a firm that was so people of color led and a women-owned firm. So we're taking our values into who we hire to help us through this process as well. But we've compared notes with several other foundations, and I think everyone's just sort of a phone call away to really to share some best practices and what you're learning at the same time.
Well, thank you so much for that. And just as a reminder to our audience, Philanthropy California, as Debbie mentioned, we're a network between Southern California grant makers, San Diego grant makers, and Northern California grant makers, and we're all just a phone call away to help each other move through this journey. And that's something we really want to emphasize here. This is this series that's sponsored by RBC is to promote that collaboration, so that, as both Catherine and Debbie pointed out, the whole could be greater than the sum of the parts. Now, one part of this journey that you alluded to a little bit earlier, Rachel, was the investment thesis that you wrote out, the policy statement. You talked a little bit about metrics and reporting. That's pretty far down the pike as far as the thinking, but you still needed to come up with those general ideas. Can you talk a little bit about those early conversations and what concerns were raised and how they were addressed, and what sort of collaborations that you put together to get advice on those?
Yeah, I mean, I think, we knew from the start that what we wanted to focus our investments in, we wanted to focus in the communities where we provide healthcare and coverage. And we knew that we wanted to address what we call upstream determinants of health, or social determinants of health, which is essentially the factors that influence someone's health in their environment, in the place where they live, in their community. But that's pretty broad, because as we know, everything in sort of community development influences people's health. And so I mentioned that, we moved into housing. Housing is an interesting space. It's largely like pretty low returns, largely like long investment periods, which aren't fun for your CFO, but incredibly stable, right? And so we had conversations early on with some banks. We spoke with Bank of America, has a CDFI fund, and I should say that in terms of collaborations, we did talk to a number of banks, because we understood from our partners in Treasury who were trying to help us get this done, that if we had bank perspectives, that would go a long way with our CFO. So we spoke with the man who runs the CDFI fund at Bank of America, which is like $4 billion invested only in CDFIs across the country. And Ricardo's nodding, I think it's CRA focused, but it might even go beyond that. Like, it's part of their market strategy, and it's part of their investment portfolio. And he was so compelling when he talked about, when the recession in 2008, 2009, when the recession hit, like, our portfolio didn't budge, and the rest of the bank's portfolio went in the toilet. And so, I think that was powerful for our leadership to hear. And so having some financial perspective on when these types of investments can actually outperform even, or just represent a powerful diversification of your portfolio, in addition, obviously, to all the impact that it brings, I think was really helpful for us to hear. In terms of thinking about the were you asking about the issue areas that we were supporting as well?
I was, but we're just about at time, Rachel.
Oh, yeah. No, go ahead.
And thank you so much for those insights. And I want to thank all of our panelists for joining us today. It has been a great first step in this learning journey. And this is one of 4 in our series. So just so you all know, on Tuesday, October 13th from 1 o'clock to 2 o'clock, we're inviting you to join us again, where we will actually be talking about portfolio activation, and actually building on Rachel's point of, how do we build out that diversity in our portfolio in a way that will both protect the balance sheet and create the impact we want to see. So I would just like to thank all of you, all of our panelists, Preetha Tranti from Sobrato Foundation, Shawn Straughan from the Roy and Patricia Disney Foundation, Rachel Myers from Kaiser Permanente, and Ricardo Flores from LISC San Diego. Please join us again in next month. And I'm going to hand it off now to Carlos to just close us down and talk about the survey.
Can I make one closing comment?
Please.
This
please,
is Rachel. I just wanted to say that grants, and Ricardo will appreciate me saying this, grants are incredibly necessary and powerful in the impact investing ecosystem. And you don't have to be an investor to support impact investing. So I just wanted to say that to this community, that grants represent a really, really important part of a capital stack when you're trying to make an investment powerful in housing and business or whatever. And so just, even if impact investing feels like a big jump for your institution, you can still get to know this ecosystem and come in as a grant maker and make a huge impact. They can multiply your grants by 10, by 50 sometimes, with the capital that they're able to raise on the back of a grant. So just wanted to make that one point.
Thank you, Rachel. And just a friendly reminder, we're going to put up a poll in just a second for the program. Also want to let folks know that our next program is going to be on September 30th. It is going to be market rate impact investing from 1:30 to 3 p.m. So we look forward to you joining us. I'll put the event in the chat channel. But otherwise, thank you everyone for joining us today. Thank you again for completing the poll, and we appreciate your attendance.
And thank you very much, Catherine, and all of the RBC team for putting this together. Thank you all. Have a great day.